Trying to shop for your house however can't get a mortgage attributable to your dangerous credit rating? Stop applying for normal mortgages currently and begin watching the dangerous credit mortgage market. Traditional mortgage suppliers seldom provide their mortgage merchandise to folks with dangerous credit. Why? As a result of if you've had hassle paying your bills, credit cards or loans within the past, you're a foul risk. Disposition you tens or many thousands of pounds can be a foul plan. The recent increase within the range of individuals during this state of affairs, however, has meant that demand has upped for appropriate mortgage merchandise. The larger lenders are still cautious of dangerous credit risks, therefore it's fallen to a lot of specialist lenders to fill the gap within the market. Consequently, the dangerous credit mortgage market is growing, and is competitive, which implies that customers littered with poor credit will notice a variety of mortgage merchandise that suit their desires, which facilitate them get their finances back on the right track. So, what's a foul credit mortgage? A bad credit mortgage may be a money product that's specifically designed to allow you to purchase your house albeit you have got a foul credit rating. Interest rates on these mortgages are generally marginally beyond for ancient mortgages. This can be as a result of the chance to the loaner is higher. There could also be some further conditions on your mortgage that are placed there to grant security to the loaner. These would possibly embody a bigger arrangement fee at the beginning of the mortgage, or stricter redemption penalties. These mortgages are typically solely created out there through specialist mortgage advisors. A foul credit mortgage will assist you to handle your money difficulties and even to boost your credit rating over the long run. Getting rejected by lenders for ancient mortgage merchandise are some things that get superimposed to your credit history. Avoid this by chatting with Associate Freelance. Old Mortgage Advisor WHO will assist you purchase your house with a mortgage that's designed for folks in your circumstances. A quick guide to remortgage. Remortgaging implies that we tend to are taking a replacement mortgage to repay associate existing one. As time passes, the appreciation in property rates raises the house equity out there at the disposal of the house owner. Remortgaging utilizes this increase in property valuation to induce a stronger deal on debt, or some extra cash. Remortgaging doesn't involve mercantilism or dynamic homes, however the debt could also be transferred from one loaner to a different. There are instances, once we need funds for a few new construction, like an additional toilet, new room, further room etc. Repeatedly we discover that a number of our existing borrowings charge higher rates of interest than those charged by our mortgage loaner. In such cases, we will North American country the extra home equity out there with us to supply funds and ease the reimbursement burden by remortgaging. Canada, in recent times has seen a pointy decline in mortgage rates. Therefore, a lot of householders having existing mortgages are applying for a remortgage to require benefits of the lower rates. Remortgaging has become a straightforward method thanks to the increasing use of data technology within the disposition method. Folks will currently apply online for a remortgage right from the comfort of their home or workplace. This has considerably reduced the time and energy for obtaining a property remortgaged. Considering the reduced interest rates and easier reimbursement choices, the householders usually see remortgaging nearly as good supply for generating capital. Dynamic high-interest debts into low-interest remortgage with straightforward reimbursement terms is usually quite money-making for the debtors. By dynamic their debt sort they will considerably cut back the reimbursement burden. There are several lenders within the United Kingdom of Great Britain and Northern Ireland market, which offer competitive remortgage offers. Since remortgages are accustomed move debts, it ought to be seriously thought of that the value of moving debts mustn't offset the savings in any such method. The redemption fees is that the biggest price to be incurred whereas taking a remortgage. A redemption fee is what an individual needs to pay once he ends associate existing mortgage contract and applies for a remortgage. There are early redemption penalties that increase the general prices of remortgage. These penalties are the most important once the debt remains new. Generally, remortgaging isn't suggested once such penalties are terribly high. However, if you have got a very sensible provide that offsets the loss thanks to the first redemption penalty, you ought to take into account it. In addition to the redemption fee, there are several different prices attached remortgaging, a number of that are mentioned below. The new loaner WHO can offer the debt can prefer to assess the worth of your property to form positive that it's not a risky deal for him. So, he would possibly charge some valuation fees for this method. The entire remortgaging method contains a legal angle connected thereto. This would possibly involve legal consultation fees. Additionally to those, the loaner would possibly embody the conveyance and different workplace charges. The individual ought to take into account these fees, whereas remortgaging choices are out there, wherever the loaner would possibly refund all or a neighborhood of the valuation, legal and workplace charges to the debtors, if the reimbursement schedule is outstanding. Make certain to raise your loaner regarding such associate possibility. Remortgaging will offer funds with low interest and simple reimbursement choices, however there are several drawbacks related to it. The debt reimbursement method once more starts from the scratch. Short-term savings would possibly result in an extended term money liability. The interests, though comparatively lower, currently should be paid over an extended amount of your time, and once more the actual fact to be unbroken in mind is that any serious default in payments would possibly result in recovery.